All right, welcome everyone to this presentation on retiring early, how you can use my approach to the market to do better in the market and really make those returns that will get you to retirement that much quicker. My name is Tyler Ballhorn. I'm the founder of Stockscores.com. I've been a stock trader for 35 years, an educator for 25 years. I've taught thousands of individual investors. I've also trained brokerage houses and their staff. I've taught hedge fund managers, and I've been doing that, like I said, for about 25 years. So tonight, we're going to be focusing on investing. Now, I did a webinar yesterday where we sort of talked about the theory, and what we're going to do tonight is build on some of that. If you have more of an interest in day trading or swing trading, we will be doing a webinar tomorrow, which is Thursday, October 17th. I'll be doing a webinar on active trading, and you can register for that at the Stockscores website. There is an upcoming events area, and you can register for that as well. But again, tonight we're going to be focused on investing, and here's the itinerary for tonight. I'll talk very briefly about how I got started in trading and the theory behind my approach, what I focus on, the theory behind, there's sort of 5 things we're going to go through and in the theory. And we'll talk about how long it takes to apply my strategies. You know, at the top of the video here, we were running a little poll, and I was asking, you know, when do people do their market research? And it was about half doing the research during the trading day, and then about a third in the evenings, and then the remainder in the on the weekends. And so I have different strategies for different approaches to the market, and we'll talk a little bit about that tonight. I'll tell you what some of those strategies are, how much time they take, how often you would do that. And then we're going to use some of the tools, of course. That's the market scanning tool, which we will do tonight. I'll give you a little tour of the Stockscores Education Center, which is an online tool for learning the market, whether it's theory, whether it's specific strategies for investing, short-term investing, long-term investing, then of course for trading as well. And then at the end of the session, we will take questions. Now, if you're watching this as a video, then you're missing out on the question period because, of course, it's live right now as I do this. But watching the video, you're not going to be able to answer questions. But you can always email me, and I will post my email address later in the presentation. All right, so let's dive right into it and talk about, I'm going to first begin a little bit with my story about how I came to do this. And then we'll talk about the theory behind the Stockscores approach. So I started investing in the market 35 years ago. I was a student in business school in the finance program at the University of Calgary. And I decided that I wanted to invest in the stock market because it seemed like it was better than working. As it turns out, it's not necessarily easier than working, but it certainly can be more lucrative. It took me about 8 years to figure out how to really perform well in the market. When I started, I did what I was taught in business school, which is study the fundamentals, look for good earnings, look for good management, you know, the balance sheet, the income statement, all of the things that they teach you in business school. However, with that said, I never met a business school professor who was driving to school in a Ferrari. The reality is that theory, although it's important to understand it, it really doesn't help you beat the market. And I learned that the hard way. I tried for a couple of years, listening to stock tips, listening to analysts on TV, reading the newspapers. Unfortunately, what I realized is that publicly available information, which is what you're reading about in the mainstream media, is already priced into the stock. You know, if a company announces that they found the cure for cancer, that's wonderful. The stock's going to go up almost immediately to reflect that great information. And once it does so, that information has no value anymore because it's priced into the stock. If you want to beat the market, you have to have information before most people have it. We talked about that in last night's webinar. And again, the webinar video is up on my YouTube channel, Stockscores YouTube channel. So if you missed that webinar last night, I encourage you to go take a look at that one as well. So the stock market isn't fair. Some people get better information than others. And with that better information, they have an advantage in the market because they can predict future stock price change because they have some better information. So if you knew that a company was going to announce a cure for cancer, before they announced it, now you've got inside information, and you could make an investment on that stock before the news comes out. Then the news comes out, the stock jumps, maybe it goes from $10 to $40 or something like that, crazy. And you have made a wonderful profit because you had better information. Now the risk, as Martha Stewart will tell you, is that it is illegal to trade on inside information. However, there are people that do it all the time. And there are also people who maybe don't trade on inside information, but trade with the privilege of knowing more about an industry, being closer to a company, having better access to information. They may not know exactly what's going to come, but because they're experts in the industry, they get quite good at predicting things. And then you have the large hedge funds and institutional investors that are managing billions of dollars. They can afford to hire the brightest minds to dig up the best information, to do the best research, to uncover hidden gems. Now, you might be saying at this point, throw up your hands, if I don't get inside information, then I'm doomed. Well, you're not, because what I'm going to show you is my approach to the market, which doesn't rely on having information at all, but rather simply relies on following the people that have the best information. And the reason we can do that is because when someone knows something that's good, and they go in the market, and typically it's a large investor, when they go in the market and they buy the stock aggressively because they have some information that justifies paying a higher price, now they leave a trail to follow, and that is in trading activity. And so I look at charts. I don't really consider myself a technical analyst. I don't really use technical indicators. I only use some indicators that I've created for myself, and I've been developing my own indicators for the last 20 or 30 years. And we'll show some of that tonight. We're going to use a tool called the Market Scan that looks for, among other things, statistically significant abnormal market behavior, abnormal price movement, abnormal volume. These are clues. When stocks trade abnormally, they are clues that someone is trading on information that is not widely known. Now, I started all that the hard way. I reverse engineered the stock market. So many years ago, when I was in university, I decided that I was going to look at all the stocks that had done really well. And I printed out their charts, literally hundreds, if not thousands of them. And I put them all in binders, and I would leaf through them looking for patterns that occurred before the stock made big moves. And I've continued to do that even now, 35 years after I started. I still spend time every day looking at the stocks that made the big moves and analyzing what was happening in those stocks before they started to move. And I have an approach that's relatively simple. You don't have to be an expert in finance. You don't have to know financial terminology. In fact, if anything, understanding human psychology is going to help you more than a business degree. All right, so let's dive into these key points that are going to help us and really understand my approach to the market. Now, our aim is to find market-beating stocks. Now, what I mean by that are stocks that outperform the market. So historically, the stock market has earned maybe 8 to 10% per year, which is great. That means your money doubles in 7 or 8 years. And if you can double your money every 7 or 8 years, you're essentially doing what the market does. Now, if we want to double our money in 5 years, then you have to earn more than the market's return. You have to start thinking about earning 12, 15% per year. If you could get to 35% return per year, well, now obviously you're going to be doubling your money in 3 or 4 years. So you can shorten the time frame to double your capital by beating the market. Now, how do you beat the market? Well, the key thing is to buy alpha stocks. Alpha stocks are those that are trading on their own story. So most stocks, most of the time, have a correlation to the overall market. And the metaphor I love to use is of sailboats on a lake. So if you're out on a lake and there's all these sailboats, the way the wind blows will move the sailboats in that direction. And so the direction of the market is essentially the direction of the wind. And when the wind blows, most stocks just move with the wind, move with the market. Market goes up 1%, most stocks kind of go up 1%. More volatile stocks might go up 2%, and stocks that are inversely correlated to the market might actually go down. But the majority of stocks will move with the market. Now, if you want to beat the market, you can't be in a sailboat. You have to be in a motorboat, because motorboats can go against the wind and they can move faster than the wind. And what makes a stock an alpha stock is having some fundamentals that are significant and driving the stock to outperform. Now, that could be, if it was a gold mining company, the price of gold is surging. Well, that's going to make all gold stocks do well as a group and outperform the overall market. And that's the situation that's been the case for gold stocks over the last number of months. Gold has been very strong, and so gold stocks have outperformed the S&P 500, the Toronto Stock Exchange 60 over the past, let's say, year. Okay? Now, it doesn't have to be a sector that's strong. It could be something specific to an individual company. If a company is researching a treatment for cancer and their treatment goes through the different stages of approval with the FDA in the US, if they get approval at the final step and their drug is going to be approved for the treatment of cancer, that stock is going to move up dramatically, because now the company's ability to make money has dramatically improved. And so we see this all the time. You'll have one little biotech company that'll go from $1 to $10 because their drug or their treatment has received approval, has had good test results, and that drives the performance, causing that stock to be an alpha stock. So what you have here on screen is a stock in an alpha sector, it's the gold sector, and you can see that it has outperformed the market, because in March of this year, the stock was at around $4, $3.50, $4. And recently, 3 or 4 weeks ago, it touched $7.50. So in less than a year, it's more or less doubled. So that is an alpha stock in an alpha sector. I'm going to teach you how to find these. I'm going to show you a tool that I use to find them. And I'll teach you a little bit about how to read charts. But again, if you were at last night's webinar, you will know that we talked about how to read a chart. And if you missed that, go to the Stockscores YouTube channel and watch my video from October the 15th. All right, so let us go to the next chart. Here is another stock that has outperformed, because in January of last year, 2023, the stock was actually as low as $100. And this week, it's hitting $600. So in about 2 years, it has gained 600%. Now, this is a large cap stock. Everyone's heard of Facebook. Meta is the company that owns Facebook. And you can see just how well it has done. It's not a particularly risky stock. It's an established business. They have earnings. You all know about the management, Mark Zuckerberg. But what's important is that it has been moving faster than the market. And these are the kind of stocks that we want to own. They are alpha stocks. They are motorboats on the lake that are moving faster than the sailboats. And in the past couple of years, stocks like NVIDIA and Microsoft and Meta have dramatically outperformed the market and been the kind of stocks that you want to own. And again, I'm going to show you how to find those as we go through the presentation tonight. All right, so why do stocks move in strong trends? Well, I've given you a clue to that already, but now I'm going to start to adapt it to a chart. The reason stocks move in strong trends is because they have some fundamental event that is driving the performance of the stock. It could be news releases, it could be improving earnings, it could be rumors. It doesn't matter. I don't care what the information is. I don't need the information, because I am going to simply listen to the market, watch the charts, and see what people are doing with their money. People lie all the time. People that come on financial news networks or in the newspapers, they're really talking up their own book, right? They're talking up the stocks that they own. So there's a heavy bias in that. And I learned a long time ago the hard way that listening to people was a bad idea because they have a bias. And so what I learned to do instead is not listen to what people say, but watch what people do with their money. And so when we look at a chart, and here's another chart here, when we look at a chart, we have clues in this chart for when to buy, when to sell, and we can tell what people are doing with their money. So if we just quickly recap what we talked about in last night's webinar, one of the things we said is when there's falling tops on a chart, there is pessimism, and we do not want to buy pessimism. So during this period, we're not interested. And you'll notice that the sentiment stock score was below 50. We talked about that last night as a way to avoid weak stocks. It's only when we start to switch from falling tops to rising bottoms that I get interested. And you'll notice here that when we switch from falling tops to rising bottoms, that the stock scores indicators start to come up through 50. And that's important. That's one of the ways that we'll find the stocks that are worth considering. And as we talked about last night, when we break up through resistance from optimism, from low volatility with abnormal price movement, we have our first clue that the people that know the most are buying aggressively, and they are going to push that stock higher. As more and more people learn what they know, you're going to get more and more people buying the stock aggressively. Now, I bought this stock, featured this stock in my in one of my groups that I have on Stockscores, and I actually have a free newsletter that goes out every week, and this was one of the stocks that I featured in that free newsletter, and I encourage you to go to stockscores.com and register for that newsletter because I put out stock picks every week and it doesn't cost anything. So in this case, I featured EVGO right there. I don't remember the exact day. It was actually on a weekend, so it's somewhere in there. And the reason I did that is very simple. I could see that there was a rising bottom, so I had optimism. I could see that there was low price volatility, which told me that buyers and sellers, investors, had come to some agreement about what the stock was worth, and it was essentially $3.75. And then right here, it made an abnormal price jump from low volatility through resistance from optimism. That was the formula that I shared with you last night. Now, it took a little while. It took almost a month. But the people that were buying here knew something that maybe the overall market didn't know. I have no idea what they knew. I don't really care what they know. I simply watch what people are doing with their money. And when there was that abnormal buying pressure with stronger than normal volume, it's kind of hard to tell because the scale gets so skewed by this volume. But that was the buy point, just a little over $4. Well, then more news started coming out on the stock, and it's been moving higher ever since. It's now doubled since that initial buy signal 2 months ago. The stock market isn't fair. The people that know the most about this company started buying late in August. Through September, the stock was dead, but it never went through this floor price. That's another thing we talked about last night. We always want to plan to lose, and we look at where's the floor for the stock before the breakout. And if it stays above that floor, then we hold. And then one day there was some positive news, I think. I didn't really read any of it, and then more and more upward trend on that stock. All right, so that is how we, or why stocks move in strong trends. Now, as I said, the stock market is not fair. There's always going to be some people that have better information than others. And when they do, they create the abnormal activity that we see in the stock chart. Now, if you put a chart in front of someone and I tell them, this is what abnormal activity looks like, and this is, can you find it on this chart? It's pretty easy. The problem is there's thousands and thousands of stocks out there. So we need a way to find the stocks that are behaving abnormally without it taking forever and ever. When I started trading, I didn't have the tools that I have today, and I would look through so many charts every day looking for abnormal activity. Now I've got a tool, which I'm going to show you in a moment, where I can scan the entire market looking for that abnormal activity. So here is another stock, And you can see here, it's pretty boring and normal, trading sideways. It's basically a sailboat. And then here it gets its motor. You can see there's abnormal volume, abnormal price action, optimism, breaking through resistance from low volatility. That's the formula that we talked about last night. And running the market scan that I'm going to show you in a moment, that stock came up at around $8, just a little over $8. And it's now 3 weeks later, and today the stock is hitting $15. The people that had the best information were buying back there in the third week of September, and the rest of the market is learning about that information too late because now the stock has already gone up so much. Now you might say, well, I would really prefer to buy the stock right here before that first jump. The problem with that is there's no indication that there's something good yet. Unless you have better information than everyone else, you won't know that there's good things happening. So we always miss the first day of the run. We always miss the first day of the run. You know, the hottest stock this week is drug. You probably heard about this stock. It's had a huge run. Well, we started trading that in my active live service on Monday, and I put out a buy signal in that free newsletter that I talked about. So if you go and go to Stockscores.com, look at the back issues of my weekly newsletter there. You'll find it on the website. And you'll see that drug was one of the 3 stocks that I featured this week. That was at $2.50. It hit just shy of $60 in the aftermarket yesterday. It's pulled back today, but you know, in and out already because it's made such a monster move. Well, the people that know the most about that company started buying Monday, created that abnormal activity. I don't know anything about what the company does. I just follow the action. And it was on our radar screens because we look for the abnormal activity. Now, as traders, it's really important to realize that we should not expect to be right all of the time. What I mean by that is you have to understand that losing is part of trading in the stock market. And if you're going to be successful, you have to minimize the size of your losses by using stop loss points. But what's critical, and as we talked about in the last night's webinar, is putting those stops at the right price. So let's look at another chart. And here we can see a nice breakout. There's an abnormal price move. Looks familiar compared to the last chart that I showed. It had optimism. It was breaking from low volatility. Okay, the volatility was compressing. It had some good volume. Through resistance, it checks all the boxes. And so when you buy right here, you're going to plan to lose at the floor, at the inflection point low, at the point where it stopped going down and started going up, right around $65. And look at that, it didn't work. It went down through that floor and you just take the loss and move on. Now it's hard for people to do because most normal people have an emotional attachment to money. They like to make it, they don't like to lose it. And so when a market tells them that they're wrong, when a stock hits that floor price, they need to sell. But most people, in the effort to avoid pain, will stick with it, and then the small loss turns into a big loss. And I'm sure there are people watching this right now that have probably done this. I certainly have. You know, anytime I tell you about these hardships that most people do, I am included in that. The reason I know about these mistakes is because I've made them all. And it's really essential to not take big losses. All right, so let's keep on moving here. Now, when we are right, we have to let the stock work. We have to let the trade work. And this sounds easier than it actually is, because so often we buy a stock at $10, it goes to 12, it goes to 13, we're really happy. And then one day it goes from 13 down to 12 again. And it can make us nervous. We can start to remember those times when a winner turned into a loser. And we start to get a little nervous and we might just sell that stock. What you have to understand is that stocks do not go straight up day after day after day. When stocks are in upward trends, they have upward trends that look like this. They go up, they pull back. They go up, they pull back. They go up, they pull back. And if you get shaken out on these pullbacks, then you miss the next leg of the upward trend. As long as the trend is intact, we're going to stick with these trades. So here's an example that emphasizes this. So here you had a stock, this is Netflix. We've all heard of Netflix. It was in this very strong downward trend. It broke the downward trend there. It built a rising bottom. This is one of my favorite reversal patterns. I call it a bottom fishing pattern. So step one is it broke the downward trend. Step two is it built a rising bottom. And step three is it broke up through resistance from a rising bottom with abnormal activity from low volatility. All the things that I keep repeating over and over and over again. You know, I've been doing this for a long, long time, and what I do today is not a whole lot different than what I did 20 years ago. Tools are more sophisticated and maybe more disciplined and that sort of thing, better at analyzing charts, but the basic concepts are the same. All right, so that was the buy point right here. Now, what I'm going to draw now is a trend line. So I'm going to start my trend line at the low, and I'm just going to let it hit these bottoms. So what you can see is the stock runs up for a couple of months and it pulls back. It hits the trend line. It runs up and it pulls back, bounces off the trend line. And then the trend line starts getting steeper. So now the trend line's more like this. It runs up, it pulls back a bit. It runs up, it pulls back a bit. It runs up, it pulls back a bit. But notice we never get a real close below the trend line. And that is how you stick with a winner. Now, most of the stocks you buy will never do this kind of a strong upward trend over time. Most of the time, you'll get a small win and then you just have to get out because there's a sell signal. You'll have small losses if you're disciplined and don't take big losses. These kind of stocks only happen maybe 10% of the time, maybe 20, but these are the money makers. These are the things you build your portfolio around. So you go out and you buy 10 stocks, you're going to get one or two nice winners like this. You're going to have maybe two or three, maybe four decent sized winners. And then you're going to have a bunch of losers, three, maybe four losers. But effective investing in the market is not letting your losers be too large, taking those losses when there's a sell signal, and sticking with your winners so you can have the big winners that really give you those market beating returns. All right, moving along. So what do I focus on? When I'm looking at charts, I'm looking for abnormal trading activity, predictive chart patterns, where we have that compression of volatility, breaking from optimism through resistance. We have to do good risk management. So we're always going to plan to lose, and that's what being a good loser is all about. If it hits that stop loss point, we're going to take that loss and move on. Be patient with our winners. Do not expect to get in at the low or out at the high. We're trying to get the middle ground. We're trying to get the 80% in the middle. We don't want to buy the bottoms because that's the most expensive way to try to buy a stock. And we don't want to try to sell at the top because it's futile and you'll actually end up missing out on a lot of the big upside if you're too aggressive on the sell side. So let's look at another example again. This is EVGO, and we'll just draw out the patterns again. So we had sideways trading. So that's low volatility. This is a pattern called a rectangle. So when I teach my students, I teach them, maybe half a dozen different patterns. And this one's called a rectangle consolidation. There's optimism into that pattern. So that makes it an optimistic rectangle consolidation. Then you have the abnormal price break through resistance from low volatility from optimism. So that is what I would give a 7 out of 10, meaning I think it has a 70% chance of moving higher. Now, someone has just let me know that I featured this stock on September 17th. So it was actually more like here. So it wasn't that long ago. Then when we enter that trade, if we're going to buy it on this breakout right in here, we're going to plan to lose if it goes through that floor. Okay, so we calculate the risk of the trade. So if we're buying at let's call it 425 is our buy point. And our stop loss point is going to be instead of 350, we're going to go 345. I always like to go a little bit below a psychological barrier. So that means my risk per share is 80 cents. So if I buy 1,000 shares, my risk is $800. Now, if you are not comfortable with losing $800, then you have to take fewer shares. So the number of shares that you buy is driven by your risk tolerance. So every time you buy a stock, you should know what are you comfortable losing, not your risk tolerance. So if your risk tolerance is $1,000, let's say you have a $100,000 portfolio, you're willing to lose $1,000 on any one trade, you're not going to lose sleep about that, then that's a good risk tolerance. When you start out trading, you should start with a risk tolerance of 0, because you should practice on paper, make sure you're successful before you start trading with real capital. But you're going to slowly start increasing your risk until you get to your risk tolerance that you're most comfortable with. I always like to say start with 0 and then maybe bump it up to $100 of risk or $50 of risk. Have some success at that level, then go to $200 of risk. Have some success at that level, go to $300 of risk. Our number one goal as investors is capital preservation. I can teach you my strategies relatively quickly, but the challenge is overcoming your emotion. And so the reason we slowly scale up our risk is because emotion is our enemy. And we're trying to overcome our emotional attachment to money, our fear of losing money, our greed to make money. That's going to cloud our judgment. And so again, even if you have $50 million to invest in the market, I'd like to see you start, as you're learning my approach, start with $0 of risk. And then take on a little bit of risk, practice. Take on a little bit of risk, practice, okay? The market's here forever. There's no rush. You need to take that step-by-step approach. All right. So in that case, our risk is $800 if we bought 1,000 shares. The stock today is at $850, so it's up $4.25. So it's up $4,250 on this trade. So we risked $800 to make $4,250. So that gives us a risk reward of about 5 to 1, a little better than 5 to 1. So that means this winner has earned 5 times the risk, which means it basically pays for 5 losers, because our losers are going to be at -1, sometimes a little bit below, depending on the strategy. So that's important. We want our average winner to be bigger than our average loser. That way, even if we're only right 50% of the time, we actually still make money. And if we can be right 70% of the time and have an average profit that is 3 times what our average loss is, now you can see the economics that make investing successful. All right. So how long does this take? Well, I have a number of different strategies. I'm going to show you an online facility where you can learn my strategies. If you're willing to put in 15 minutes a day, then these are the strategies for you. And at the top of the video, we did that poll. Half of you said you're looking to do your work during the trading day. So I would focus on these ones. My favorite, and the one we're going to do tonight, is abnormal breaks. Bottom fishing is good when you're coming out of a bear market, but there's not a lot of that. Well, actually, it's not true. The small cap stocks are giving lots of bottom fishing signals right now because the small cap stocks have lagged the large cap stocks. Now, if you only want to do this 15 minutes a week, you're going to look at weekly charts and you're going to focus on these strategies. Same concepts, same idea of looking at charts, looking for what I've talked about tonight, but instead of looking for it on a daily chart, you're going to look for it on a weekly chart. And instead of doing maybe 40 or 50 trades in a year, you might only do 10 because you're not going to be as active, more of a long-term investor, more passive, 15 minutes a week. That's the strategies to focus on. So how do I find opportunities? I have a tool called the Stockscores Market Scan. I built this tool from scratch. I wanted to build something that allowed me to scan the entire North American stock market in minutes using filters that are unique to my approach. So when you go into the market scan tool, you are using filters that are not anywhere else, because, and some of them are, but the things that are important in the market scan tool are my own creation. Okay, my stock scores indicators, my abnormal price action indicator, my abnormal volume indicator. These are key components of the market scan tool, and they're just not available anywhere because it's my own invention. All right, so we're going to look at that tool quickly now. I'm going to jump into the Stockscores website. I'm going to go to the market scan and click on market scan right there. And you can see that there's all these filters here. And you don't actually have to know what these all are because I have presets for you. But if I wanted to, I could say, show me all the stocks on the American stock exchanges that have a sentiment score of at least 50, that made an abnormal break to the upside, that are more than $1 but less than $20 a share. And I could even say they have to pay a dividend yield of at least 5%. And let's run a scan. I don't know if we're going to get any, but let's try. Also, we'll just say it has to have traded at least 200 times today and run that scan. And there's 6 stocks. You see that almost instant. 6 stocks that meet the rules or the requirements of that market scan. And then I can view the charts to see if they have the right kind of pattern. Now, this stock today is a good hold, but it's really made its breakout from a good pattern back here when it behaved abnormally through resistance, from optimism, from low volatility. That's what started it higher. And notice that the stock scores spiked up on that day. They were above 50. They had the big spike in our signal stock score. These are all rules around different strategies that I teach. I'm not going to go into each individual rule tonight. That's something for later. And I can zip through these charts looking for chart patterns that I like. Now, a lot of these stocks will simply be holds. This is a stock that's actually making what we call a pullback play. So we have a stock that runs up, pulls back, breaks the pullback. That's good. Runs up, pulls back. Today it's breaking the pullback. It should continue higher in the near term. It's good. I would give it a 6 out of 10. I'd want to take a look at the 3-year chart. So I can click on this little 3Y signal link here. And there I see a little bit of a problem because there's going to be some resistance right about there from these old price peaks. And that limits upside a little bit. So yeah, a 6 out of 10, I think, is an appropriate score on that stock. It's gone from $12 to $16 already in the last 4 months, but I think 18 is going to be an area where it gets stuck. So what I do every night is and actually during the day as well, is I go through these market scans looking for opportunities. Now, stick around till the end of the video because we're going to do a market scan together. We're going to try to find some stocks that are worth considering, and I'll walk you through it step by step. So we'll get to that in just a moment. But before we do, let's just finish up on understanding what the rules are in order to understand the strategy rules, the processes, the buy signals, the sell signals. I've created an online resource called the Stockscores Education Center. Now, this is only for members of Stockscores, so I'm going to give you a little behind the curtain look tonight at what this is all about, and I'll tell you how to become a member in just a minute. So we have foundation lessons, which are theory. And there's a written lesson, there's a video lesson, there's an assignment, and there's a test. And then we have strategies. We have investor strategies, which we're going to focus on tonight. And then tomorrow, we're going to focus on active trader strategies. So make sure you're registered for tomorrow's webinar, which is Thursday, October 17th. I will do a webinar on day trading and swing trading, and we'll dive into some of that as well. But tonight, we're going to focus on investing. So let's jump into the Stockscores website again. And instead of being in the market scan tool, now we're going to go into the trader training tool and select Education Center. Now, again, this is a member tool. So if you're not a member, you're not going to be able to log in. You can see that I'm logged in here. And this is where you can, actually, there is some free content. So this getting started section, this is all free. So anyone can view this. It's only videos. But if you want to know how the stock scores work, then there's a video right there, the stock scores indicators. If you want the basics of charting, there's a video on that. If you want to know how stock scores charting works, there's a video on that. So I encourage, if you want to learn some free stuff, that's where to go. The member stuff is in the foundation section, and this is where we can see the theory. So the 6 elements of chart patterns, which I talked about tonight. Predictive chart patterns, I've touched a little bit on that tonight, but the rest of this stuff I haven't gone into much detail. We did talk a little bit about risk management and a little bit about using stop, but there's more to it than what I've described so far. So if I wanted to learn about the 6 elements of chart patterns, I click on lesson and I can read about it there. There you see, we talked about inflection points tonight. and last night's webinar. So there's the inflection point talk. And then from that, we can start to draw lines on this chart to look for patterns. So that's the written lesson. If I wanted to watch the video, I click on the little video icon and I can watch a video that is half an hour long and taught by me, going through the elements of chart patterns. So that is the investor course, giving you access to the foundation lessons, giving you access to the investor strategies, giving you access to the investor strategy market scans. Now let me jump back into Stockscores, go to the market scan, because when we did this scan, we built our own, but there's actually presets. So if I was a investor looking for stocks daily to possibly buy, I would run one of these scans right here. Abnormal Breaks US is the one that we're going to run tonight in just a little bit. And so I can run this scan. It's got all the presets loaded in here. That's highlighted in blue. And then I run the scan and it gives me 149 stocks to look at. Now we're going to make some tweaks to this when we come back to it in a little bit so that we don't have as many candidates to look at. Now the active trader course, we're going to talk about that tomorrow, but very quickly, it's the same thing as in the investor course, plus you have access to my active trader strategies for day and swing trading. You have access to my proprietary real-time indicators for TradeStation and a service we have called Active Live. I'll talk about that tomorrow. I'm going to just, Active Live very quickly is a real-time live webinar. We run it every day, and it is me showing you my analysis screen in real time, and I walk you through the opening part of the day. I walk you through the end of the day. We review trades together at the end of the day. I'm always teaching. My goal with Active Live is to teach you how to fish. I'll throw you a few fish, but you shouldn't think that my goal is to just tell you what to buy and sell, because I don't think that helps you. I want to teach you how to know what to buy, how to know when to sell. And so, again, I'll throw you a few fish just about every day, but ultimately, I want to teach you how to do it yourself. And that's a big part of what Active Live is all about. Now, we're doing some bonus live training taught by me in November. We're going to do theory on Monday, November 4th and Tuesday, November 5th. We're going to do an hour and a half each night, and I'm going to walk you through the theory. So tonight we've spent, maybe 20 or 30 minutes on theory. We're going to take a much deeper dive, and I'm going to give you the overview of the theory that you need to understand in order to execute my strategies. And then the following 3 nights, we're going to, on Wednesday, Thursday, and Friday, we're going to practice. We're going to do market scans. Now, as I said, we're going to do a market scan tonight together, but on these nights, we're going to do a bunch of market scans. We're just going to practice looking for opportunities. Now, for those who do take the Active Trader course, you get a free month of my Active Live service. And that's where you're just watching my analysis screen and listening to me through the day. All of the classes I teach are recorded, so you can watch them 100 times if you want. The Active Live sessions aren't recorded all day long because that's too much. But all of these classes, they'll be recorded. So if you couldn't come on one of those nights or 2 of those nights, whatever, and I know we have a lot of people here in Europe that for them, 6 p.m. Pacific time is in the middle of the night. And the reality is most of my students are in North America. So for that reason, I record everything on video so that people in Asia, people in Europe can all take advantage of these lessons as well and not have to be up through the night watching them. Now, we do have a special offer. You get all of these extra classes. So normally if you were to go to my website, you could buy the course and you get instant access. You have access to all the online material, but twice a year, I complement that with these overview classes. And if you're registered for the classes before Friday, October 25th at 11 p.m. Pacific time, if you register before then, you get all this stuff for free. Okay, so the investor market scanning sessions, the overview classes, if you're the active trader course, then you get a month of Active Live for free. If you do the mentorship course, you get a month of Active Live for free as well. So always people want to know what's the cost. So I've been teaching for 25 years. The cost is almost the same as it's always been. My goal is to teach a small number of people every year. It's what allows me to keep the Stockscores website up. It's an expensive website to keep up because of all the analytical stuff that we do and the data required for that. And I only teach about 100 people a year. I don't want to teach 1,000 people a year, because if I do that, the tool starts to lose its value. The reason that I don't allow people to just subscribe to the tool is because if a lot of people are using the tool, then it has less value. Because if we're all chasing the same stocks and there's thousands of us, then it has less value than if there's a relatively small number of us. And so we have multiple strategies with a relatively small number of people applying those strategies, and it allows it to, not have a bunch of people competing against one another. So the prices, as you see on screen, are $29.95. This is Canadian dollars, so that's about 2,200 US. The active trader course is $39.95 or $29.50 US. The mentorship, $59.95. Mentorship is like a 12 hourly class where I walk you through it. I'll talk more about this on the Saturday webinar. I don't want to spend a lot of time on this tonight. That's $4,400 US. And if you've taken my course in the past, you can upgrade. But here's the best part. If you want, before October 25th, you can get $500 off either of the courses. So if you want the investor course, this is the discount code. And that'll give you $500 off, $29.95. So now it's $24.95 Canadian. And you can Google and see what that is in US dollars or in euros or Australian dollars, wherever you are. If you want to do the active trader course, there is the discount code for the active trader course. So take a picture of that, or again, I'm going to upload this as a video. You can watch this video later if you forget the codes, but just write them down quickly. I'll be emailing that out to people that are interested as well. If you want to learn more about this, we have a web page, stockscores.com/learn. If I go to the Stockscores website, go to Trader Training, learn how to trade, and you can see, if I click on it properly, you can see this page. It's got a few videos. It talks about what's in the course material, all that kind of stuff there. And you can actually order it right here. And so I can do that. I've already entered in the code. And so it gives me the $500 off. Now here you'll notice $300 yearly. Okay, you don't pay that now because you get 6 months access to the tool for free. But then after 6 months, to continue using the market scan tool is $300 a year. And that just really pays for our data costs. So it's not something that we're trying to make money on. It's just the reality of, keeping a website up and getting the stock market data has a cost. Okay, now what I'm going to do is launch a little poll. As I talked about last night, I don't like to bug people with marketing stuff, and I don't do hard sales. It's not my style. So what I want to do instead is let you tell me if you would like to get some information emailed to you, probably on the weekend, maybe Sunday. And that will be an email that will talk about the different course options, the pricing, all that kind of stuff. If you don't want me to email you, just say no, and I won't put you on the list. So I'm going to leave this up for just a moment. We can close the poll now because we are going to do a market scan together. Before I do so, just some testimonials from past students. I've been teaching for 25 years, and people that took my course 25 years ago are still subscribing to the tool and renewing every year. I know a lot of these people personally. I've met them. In fact, well, at least one of them I've met, no, two of these people I've met face to face, and the other two I know just from emailing back and forth. So again, it's personalized service. Because I don't teach a lot of people, I can give that higher level of service. But now let's talk about the market scan tool. So we're going to jump back into the market scan. We're going to do a scan together. I'm going to take this out of the shopping cart. We're going to go to market scan, and I am going to run the abnormal breaks US, but I'm going to make a couple little tweaks to it, because the area of market that was strong today and really for the last week has been the small cap stocks. So I'm going to limit my search to stocks between $1 and $20. And because I want stocks that are generally showing optimism, I want them to have a sentiment score of at least 50. So you can take a preset scan and you can add in filters. And I'm going to run that. So you may, only want to look at stocks under $5, whatever your preferences are. So we're going to run that scan. There's 50 stocks that we have to go through. Now we have two ways to go through charts. We can go through the gallery view or the slideshow view. Now we're going to do the slideshow view because it makes the charts nice and big. But if you wanted to go through charts quicker, you go gallery. I'll just show you what this looks like. And you get these little mini charts. Once you're good at reading charts, you can zip through charts quicker with the gallery view. But I'm going to do slideshow view tonight. All right, so here we have a stock. You can see it's made an abnormal price move today. You can see that there's a little bit of optimism, but there's also some pessimism. And there's going to be a little bit of resistance there. So I'm going to give this a 6 out of 10. It's good. It's not great. 60% chance it's going to go higher. Here's another one, uranium stock. Uranium stocks have been strong lately. This one's actually a bit of a laggard in the sector. It's breaking from optimism through resistance and has broken through that resistance. So that looks pretty good. Volume is a little higher than normal. What I don't like about this is it's actually lagging the other uranium stocks. So I would give that a 6 out of 10. So I'm going to go through these a little quicker now. This one I like. It's had its first abnormal day there. It's gone sideways and then today started to come alive again. Now, because I want to see the volume, I can see that the volume in the lower part of my screen there is a little higher than normal. I'm going to dive in using these quick links at the top of the chart. I'm going to dive in and look at the 10-day trading action. And there I can see there was volume today. Price action was up. There's optimism. So I'm going to give this one a 6.5 out of 10. Meaning I think it's got a 65% chance of going higher, enough to compensate you for the risk. Let's keep going. This one's pretty good, but there's a problem with the risk-reward relationship. I'm not going to go into that detail tonight because we don't have all night to do this. Here's another uranium stock. I think it's too late on this one. It's been moving up for about a month. I'm going to jump right past that one. This is another uranium issuer. It's okay. I'm going to keep going here. This one's too late. This stock made its break. So here it had the downward trend, broke the downward trend, built the rising bottom, and broke up from the rising bottom about 3 weeks ago at $2. That was the entry point. And if you were doing this market scan on those days, the sentiment stock score was above 50. It made an abnormal price gain. All the things was satisfied 3 weeks ago. Now that stock's up 50%. Okay, I would not buy it here. It's a hold if you're in it, but I wouldn't buy it here because it's running away from its trend line. It's too far above its trend line, which means it's more likely to see some profit taking soon. No sign of it yet, but could happen. This stock, too late. When was this stock good? Here, low volatility, came alive with abnormal activity, moved above 50, and it did it again here, right there at $1.80. Here it was at 90 cents. Now we're at 320. Good hold, but I wouldn't buy it here. Okay, Lithium Americas, I like this one. This I'm going to give a 7 out of 10. It's got resistance here, optimism, breaking. Look at the volume, really strong volume. So that tells us that investors are excited. So I think that has a 70% chance of moving higher in the weeks ahead. Now we're not going to go through all of them because again, I don't want this to take all night. I know some of you are in time zones where it's getting pretty late, but I'll see if there's anything else that I went through this earlier today. And I think there was maybe one more, another uranium stock. Notice I'm going through these really quick and the website's very fast. It's a great time saving tool. You can go through a lot of charts quickly. Now, I'm going through really fast because I've practiced this for 30 years and I know what to look for. When you're starting out, you're going to take a little more time. All right, here's a good looking chart. We've got optimism, resistance, breaking from resistance with a lack of volume. So that lack of volume makes it a 6 out of 10. Let's go through 3 more. 1, that's okay. 2, it's okay. And 3, pretty good. Okay, so that is the market scan tool. So there's my contact information, tylerb@stockscores.com, on Twitter at Stockscores, and YouTube. I'm not on Twitter much anymore, but maybe I should get more on there. And then YouTube, make sure you're subscribed to my channel on YouTube. It's free, and I do at least one video every week, teach you something, give you some stock picks, that kind of thing. All right, so I'm going to wrap up tonight's presentation. I hope you've enjoyed it. I hope you've learned something. Remember, we have another one tomorrow. Tomorrow we'll be focused on day trading and swing trading, but even if you're not interested in that style of trading, it is, there's a lot of these skills transfer over. So I encourage you to check that one out as well. If you have other questions that I maybe have missed, or you have questions about the course, you can email me. There's my email address. And I want to thank you all for joining me for this presentation. If you're watching this on video, hit the like button, make sure you're subscribed to the channel, and we'll see you at the next one. Thanks, everyone. Have a great night.